Now, I want to bring in Scott Bauer, CEO of Prosper Trading Academy. Scott, I know you come with all the prosperity data, but it looks like the setup for stocks, before I know we dive into different asset classes, looks like stocks look like they still will be under pressure by the direction of futures right now, although we got in some inflation data that was better than expected. What's your take?
Well, today's a big day because it's a triple witching day. It's the last one of the year. It's also the largest day ever for expiring options positions. There's somewhere between 6.5 and $7 trillion of expiring options today. So it is no doubt going to be a busy and a volatile day. How much is PCE going to play into that? Well, I think there is a little bit of a sigh of relief that the number is not hot, especially following the activity that we have seen earlier in the week. But I think what this shows, Diane, is that the market doesn't really know what to expect, and that all of these data points that we see are probably magnified a little bit too much. I really believe that. Now, that being said, I think that this is a really good opportunity to dip your toes into the market. I think the market is oversold here. We fell way too fast, too quickly, with too much volatility. Typically, when we see that, especially when we see such a massive rise up in the VIX, and what we saw the other day, second largest jump on a daily jump ever. Typically, that can be a bit of a sign of capitulation. I'm not saying that the markets can't go down from here, but I think the severity of what we have seen is probably going to subside. And if there's a stock on your list or an index on your list, that you've been looking at and waiting for a pullback and, waiting for a buy the dip, this might just be that opportunity.
All right, and let's talk about a safe haven play that we continue to watch, and this week that would be gold. Gold a little higher right now, but it's been under some pressure this week. What levels are you paying attention to, Scott?
Yeah, right below about 2570 or so is really the line in the sand for me. We've been making some lower lows and lower highs recently, obviously with the pressure in gold, with the dollar being stronger and rates ticking higher here. 2570 though, which is about what 2-3% below where we are right now. That's really the line in the sand for me, where I would say, okay, now we've got some issues. I still believe that we are in a buy the dip environment in gold. If you've done that over the last several weeks, obviously you're smarting just a little bit because we have continued a little bit lower here. But I do think the fundamentals are still in place for gold to rebound from here. But again, 2570 is key for me.
Okay, 2570, your line in the sand there. All right, let's talk a little bit about the dollar. We've been seeing some pressure this morning, but the dollar had jumped to about a 2-year high. What are you paying attention to with the levels when it comes to the dollar, especially off the back of the moves from the Fed and the conversation we've heard from the Fed this week?
Well, I mean, boy, it was the perfect storm for the dollar, right? You got a Fed that turned pretty much to the hawkish side, or at least let's call it not as dovish, while other central banks around the world are continuing to lower rates, are continuing to be dovish. So that set up just a perfect scenario for the dollar to rally, which, boy, did it rally, very strong. Is 108, 108 half or so where we got? Is that the top? Probably not. But we now have set a new range. Our range before was really like 100 to 104 or so that we traded in for the longest time. And now I believe that new range is going to be 104 on the bottom. So what had been previous resistance, I believe, is now going to be massive support for the dollar. I'm not saying that we're going to trade down, 4 clicks down to 104, but that is going to be a range here to really watch out for. And on the upside, I think we could probably hit 111, 112 if the data continues to be hot. I know this morning's was not, and that's why we're seeing the dollar trade off a little bit here. But really, 112 or the 111, 112 area is really what I'm looking at on the upside.
And then, Scott, really quickly, the strength in the dollar poses a headwind for oil prices. We've seen oil pull back. Some of that seems to be demand, but it's below $70 a barrel. I thought that was notable. What level are you paying attention to when it comes to crude oil?
Yeah, if we break 65 on the downside, Diane, I think we could really see a 5 handle in crude. That has been the recent support area, kind of 64, 65 area. I think we're going to go right through it because, as you just mentioned, to me, this comes down to not just what the dollar is doing, but basic fundamentals of supply and demand. Right now, we have supply, demand is waning. So I think that we're going to see crude fall below 65.
All right, Scott Bauer, CEO of Prosper Trading Academy. Thank you so much, Scott.